Hey everybody, this is the Dumb Investor, and today I'm going to talk about my latest dumb investment, and that is Dr. Reddy's. I bought 150 shares of Dr. Reddy's worth over rupees 7.5 lakh. Let me show you my portfolio and I will explain you why. So this is my SBI cap portfolio. As you can see, currently I have two holdings, Dr. Reddy's and Kingfisher Airlines. For now, please don't laugh, just ignore Kingfisher Airlines and let's focus on Dr. Reddy's. So as you can see here, my Dr. Reddy's holding is quantity of 150, amount invested 7,57,000, average cost price of 5051, and the price that the share is trading at right now around rupees 5,400. The current value is around 8,16,000 with an unrealized profit of 58,000. Let me show you my purchase strategy for this stock. So as you can see here, I staggered my purchases over a few months in small batches. My first batch was way back in December 4, 2020 of 35 shares for 4,890. My second batch of 65 shares for 5050 in April of 2021. My third batch of 25 shares for 5175 in May 28. My fourth batch of 20 shares on June 8, and my last purchase of 5 shares for 5155 on June 8. So this is generally how I do my buying. I tend to stagger my purchases over a period of time, kind of like SIP. So almost every time I have a price target in mind when I buy a share. When that share hits that price target, I tend to purchase it. So to let you all know, I am not a day trader, nor do I do futures and options. I am a classic old investor. I buy a share with a set target in mind. Once that target is achieved, that can be within 1 day or 1 year, I then sell my stock. For Dr. Reddy's, my personal target for the stock is around 5,700 to around rupees 6,200, and I will sell my holdings anywhere between that price. Why Dr. Reddy? I will explain that to you in a second. But before that, let me tell you, this is not my only holding. I also have some investments via my mother and my father's Demat accounts, which I will share in my next video on my complete portfolio of stock investments. So coming back to Dr. Reddy's, why Dr. Reddy's and why now? To explain that, let me show you the fourth quarter results of Dr. Reddy's at a glance. So this is the fourth quarter results of Dr. Reddy's. So as you can see from the fourth quarter results, the results were not spectacular in any way. However, there's a catch. As you can see, for the financial year ending 2021, the EPS for Dr. Reddy's was 117 rupees. It was around 4% down as compared to the previous year. However, Dr. Reddy's has an ace up its sleeve. It's the Sputnik vaccine along with the production of Remdesivir and a DRDO drug 2G. And these are not the only two COVID medicines being produced by Dr. Reddy's. There are a few more. Now recently, government notified the price for all the vaccines being manufactured and sold in India. If you take a look at the articles, the cost for a Sputnik vaccine single dose was fixed at rupees 1145. If you're tracking Dr. Reddy's, you must be aware that Dr. Reddy's has an exclusive license to market the first 25 crore doses in India being manufactured by any company. So assuming even a profit margin of 10%, that is rupees 100 per Sputnik dose, that translates into an estimated profit of around 2,500 crore. The profit for the entire previous financial year by Dr. Reddy's was around rupees 1,950 crores. And with one single vaccine, there is a potential for Dr. Reddy's to easily double their profit in a year or two. Even if Dr. Reddy's decides to sell the Sputnik vaccine at a 5% margin, that is 50 rupees per dose, 50 into 25 crore is around 1250 crore worth of potential profit to be had. And that does not even include the profits from the COVID-19 drugs like Remdesivir and 2G. So at the current market price of around 5,400 rupees, Dr. Reddy's has a cushion of comfort going forward. Pharma companies are sometimes considered a hedge against falling markets. That is, when the markets tend to crash, pharma stocks tends to retain their strength. This, along with Dr. Reddy's having a very low debt to equity ratio and a strong product pipeline going forward, I believed it was a relatively less risky investment. As I told you earlier, my target for this share is around 5,700 to rupees 6,000 or 6,200. But for long-term investors, I believe this stock can offer even more returns in the longer run. Those who are thinking of purchasing this stock now, I believe a price of around 5,200 to 5,400 is a great entry price. You can easily earn around 10 to 20% of profit in a few months or maybe a couple of months. This stock has a lot of positives for it going forward, and I hope it makes me a lot of money and as well as for you going forward. I will discuss my entire portfolio in my next video, so stay tuned for that, and I hope you enjoyed this one. Thank you for watching and have a nice day.